Good evening, everyone. Time for another silver update. This is the 5-minute silver chart provided by netdania.com. You can click on the link below. And I've highlighted here last couple of days. This is yesterday morning. This is this morning. So you can see we have the same smackdown pattern that is occurring on a daily basis. You can see the high was about 30.57, the low about 30.12, about 40 cents there. Today we had about 30.80, low about 30, another 40 cents, 40 to 50 cents. So the same pattern is occurring. We're getting a rally starting at 3 a.m. Eastern time in Asia. As soon as the New York markets open, they crush the price down. It actually has this very similar M signature that you can see. So the pattern is becoming so predictable that it would actually be in your interest to trade that, and we covered that yesterday with Zero Hedge's article. But of course, with the MF Global scandal, and that's going to be the main story of the night, with their machinations with MF Global, they are actively discouraging anyone from playing these obvious patterns because they may never see their money. So let's jump out to the weekly chart. You can see that we've now gone from a MACD that was rounding up to a MACD that is, let's see if we can pull the line off of here and come in close. So we're looking at a MACD that is actually sharply trending higher. Now the technical point that I had was 30.50. You can see that entering into the night session tonight, we're above that technical point of 30.50. So it wouldn't surprise me to see a breakout tonight starting around 3 a.m. Eastern time when the Asian buying or perhaps Globex buying comes in, that we get a rally and we get maybe up to $31, and then of course get the smackdown that we have been seeing, and we'll see how long that pattern lasts. On the daily chart, we're approaching, actually we have crossed the positive line, so you can see we're at 0.05. So we do have a crossover of the MACD. The last one we had was all the way back in November, and then it turned down. And the prior one to that, we've got to go all the way back to the summer of 2011. So a very good potential bullish situation. A critical line here on the MACD is going to be the breakout here. You can see that we predicted that this breakout would be significant once it came. Now it's crossing the zero line, so hopefully we get some upside action. Of course, those of you who are stacking probably want to see some downside action, because if you believe in the fundamental story, then you're always looking for lower prices to stack at. So let's move over to the main story of the night, and I wanted to do a little precursor to that by going to the blog, and this is the top story on the blog right now. It's a very interesting story. It's from a couple days ago, but I just thought that it was so interesting I would cover it. It's called Steel Yourself for a New Non-Nickel Loonies Toonies, and I put at the top of the story the periodic table of the elements. Those of you that are familiar with this table, it's really fairly simple. Apparently not fairly simple for people in government, but for people who understand a little bit of chemistry, that you have these increasing atomic weights in these elements. Now you can see you've got silver that has an atomic weight of 47, and you've got gold with an atomic weight of 79. And we know that tungsten, which is over here at 74, That's what they make the fake gold bars out of. Molybdenum would be what you would use for fake silver bars. And of course, the reason why is that the atomic weight is directly related to the size of the object. So if you have an object that is, say, atomic weight 79 and another object that's atomic weight 47, that's why your gold eagles are physically smaller than your silver eagles. It has to do with the mass and the atomic weight. So what is so interesting about this story, and there's just many ironies here, but I'll read it to you briefly, just the snippet that I covered. In an effort to save taxpayers $16 million annually, new versions of the loonie and toonie will be introduced this spring made from steel, replacing the more expensive nickel found in the current versions of the coins. A detailed summary of the change filed by the federal government in Canada Gazette last month says the new coins will be slightly lighter, cheaper to produce, and harder to counterfeit. They're also going to cost Canada's coin-operated industries $40 million in recalibration costs to make vending machines recognize the new coinage. Now, why do they have to do that? Well, we have to go back to the periodic table. If you know anything about vending machines, you know that people are trying to trick them with slugs. And that's the same thing that you have with your fish tester. So when you have a fish tester that is going to test your silver or gold coin, you're going to take the size of the coin, you're going to take the thickness of the coin, and you're going to take the weight of the coin. And when you use those three measurements, then it's impossible to fool the tester because this is based on atomic weight. So that's an example of a scientific principle, much the same as the scientific principle of free markets and supply and demand and price, something that governments don't have the power to fool, but they continually try. So we have the ridiculous situation where the government is recalibrating these to save 16 million, but at the cost of 40 million for the industry. Now, I suspect the cost is actually much, much higher than that. And the ultimate irony of this story is that probably, I would guess, with the continued inflation that we have, that by the time everything is recalibrated and these machines are ready to go to take the new coins, we'll probably have to change again. Maybe, I don't know, to aluminum, perhaps plastic. So the silliness of these governments who continually debase the value of their currency, and we're going to cover that when we cover the CPI. Briefly, I wanted to mention that. So let's jump over to that. This is a picture of Gideon Gono. If you don't know who he is the president of the Federal Reserve Bank of Zimbabwe, and you can see him here holding up a $50 million Zimbabwe note. Now, if you were following the news, you know that the government reported the CPI this morning, and of course it wasn't any higher. There was a 0% inflation rate. So we might as well have Gideon Gono reporting our inflation rates, and he's the Baghdad Bob of central banks. So they're constantly assuring us that they're winning this war against inflation as he's holding up a $50 million Zimbabwe note. So we know that these numbers are ridiculous and cooked, and I wanted to show you just a little idea of how that's the case. This is a link that's on the blog. This is the Federal Reserve Bank of Minneapolis, and they have the link to the inflation calculator that calculates the Fed's or the Gideon Gonos of the world, their inflation index. Now we can see using their inflation index, taking the gold high of 1979 of 850 and 2011, there isn't a 2012, so we use 2011. When we calculate, we get 2650. So we can see that gold is almost $1,000 below its inflation adjusted high of 1979. And I contend that we're actually in a far worse situation than 1979. So gold has to rise by about 40% or so. Now the number is even more extreme when we calculate silver. We know our high was roughly 50 in 1979. When we calculate that today, based on the government's figures, we should be at about $155 for the all-time high on silver. So you can see that silver is still priced, believe it or not, at only 20% of its all-time high. Now this is Fed figures, so I'm just going to say that these Gideon Gonos of the Federal Reserve are fibbing to the tune of 50%. So we'll say that now we don't have the ability to adjust their built-in inflation calculator. So what I've done to simulate that is to simulate the 50%. So 1979 was roughly 30 years ago, so we'll just use 30 years as a round number, and we'll just simply take 30 years off of that, and that'll give us a closer number to the truth. So we want to use 1949 as our year, and then we want to calculate. And you can see using 1949 as the year, which probably more accurately reflects the inflation that we've had, silver should be trading at $475 an ounce if it's at its all-time high. Now, we know that silver is only $30 an ounce, so silver is actually down 90% from its all-time high using those figures. So go to that site, you can do the math, and it's very interesting. So let's get back to the blog, and I want to jump down to a story that was covered on Jesse's page. If you're not familiar with that, that is Jesse's Le Café Américain, and he did a linking of these stories that came out about MF Global today. They came out fast and furious. Some are older, but I just wanted to go through some of these stories real quick. And the first story that he links is from Bloomberg, and this is MF Global commodity customers must be paid first, the CFTC says. So that's kind of a vote for Bix Weir here. We've got the CFTC stepping up and saying, hey, hold on, we got to pay off the customers first. So I'll read this little bit of this to you. MF Global Inc. commodity customers must be paid before all other claimants, including the bankrupt parent company, according to the Commodity Futures Trading Commission. Court papers by the trustee for MF Global, Louis Freeh. Yes, that's the Louis Freeh. That's this Louis Freeh. This is the Louis Freeh of Ruby Ridge, Waco, the Khobar Towers, the Montana Freemen, the Unabomber, Chinese political controversies. Yes, that is this Louis Freeh. That's the same person. You can see right here. In November 2011, Freeh was named the trustee. The trustee for the MF Global bankruptcy case. So now we have good old Louis Freeh arguing that commodity laws, which require that customers be made whole first, don't apply to brokerage liquidations the regulator said in court filing. Free, representing the parent company creditors, has said money due to them shouldn't be diverted to customers. Okay, so to summarize that for you, MF Global stole customer money by rehypothecating it and investing it in losing sovereign bonds in Europe, something they had no right to do. That money should always have been segregated. And now we have Louis Freeh, who obviously, and we'll see in the next story, probably is being paid by JP Morgan to argue that the creditors should be first in line before the customers whose money was stolen. Now, this is a typical pattern that we have in the corrupt government. You see that in bankruptcies. Of course, anybody who's rational would agree that when a company goes bankrupt, the first thing in line should be the back wages of the employees. Of course, you should pay the owed wages of the employees who've worked the hours, and then other things should be in line. And obviously, the corrupt people have everything out of order. So the next story on MF Global is the FSA pressures banks to hand over MF Global UK client money. So this isn't just isolated to corrupt US entities. We actually have £1 billion of stolen money in the UK. So now this is where we get one of the key players here is JP Morgan Chase and Company. Now, if there's a company that has its fingers in every crooked pot more than the vampire squid known as Goldman Sachs, it would have to be JP Morgan and Chase. And of course, we've got the Bank of New York Mellon, which, as I pointed out in one of my videos, is the trustee of the SLV, and then we've got Citigroup here. So we've got all the sleazy players involved in taking down a commodity brokerage, which is something that the small players are using, of course, to play these rigged casino games of the futures market. So that's the second story. And the third one is JP Morgan is at the center of the MF Global scandal. So I will let you read that when I'm running out of time. I just wanted to cover finally the chart here, and the monthly is the one we're going to go out to for the last point. And the monthly is the one chart that we still have the MACD falling. You can see the strength in the price. Got a base about there, and we've got another one about there. So the first thing you want to look at is it in a bubble? Now, this spike that we had here could have arguably been called a bubble because we fell all the way down from there, which pretty much retraced all of the action all the way back to there. So that's closer, much closer to a bubble than what we're looking at here. This support that we've reached here kind of has no corresponding support, such as what we would have to go to here to duplicate the type of fallback rallies that we've had. So if we continue to rally from this point forward, and I'm looking really closely at the overnight tonight, of course, because as I pointed out, we've tended to rally starting at 3 a.m. Eastern. For those of you who are up at 3 a.m. Eastern, you're going to want to watch to see if we rally. And of course, those of you who still have futures accounts that haven't been robbed by the MF Globals of the world, you might want to put on a paper trade if that's your interest. And I'm not giving investment advice, but you might want to make yourself a quick 40 cents on the SmackDown that comes around 8:30 or so in the morning when New York opens. And we'll talk to you next time.